Hello, everyone. Welcome to another episode of Punch Card Investing. It's been a dark day for the market, really a dark week, and if not a dark year to start off for the market. So, kind of wanted to talk a little bit about that and what we're planning on doing with our value investing lens. And Karan was just asking before he was saying before the show started, what market crash? He's not even looking. So, kind of wanted to talk about some of that because it's definitely on a lot of people's minds right now. We have fears of inflation, rate hikes, all sorts of negative sentiments that I'm sure we've all heard plenty about. So we can kind of go into that. But before we do, please be sure to smash that like button because that goes a long way towards helping the channel, as does subscribing if you haven't already, because we're growing every single week. We're almost over, if not, we're already over 2,700 subscribers, which is pretty neat. So thank you everyone for your support. Check out the Discord as well. We got, let me check actually right now how many people we got in the Discord. Almost 500, it looks like. Yeah, we're approaching 500 people in the Discord. So join that if you haven't already. And there's lots of conversations about value investing and everything about investing in general. And we got a memes page too as well. So check that out too. All right, guys. What do we start with here? The S&P 500 is down something like 8.5% to start the year. It's down 5% this week, down 2% today. Is this the end, guys? Or is it time to quit stock market investing?
It's all manipulated.
Right. We got to get a short squeeze going on the entire market, and then we could stick it to all the short sellers. Is that it? You know something about that, Karan.
I mean, maybe a thing or two, yeah. I don't know, man. Like, markets are just... I mean, I think it's good in a way. Like, we need a correction. It's kind of been boring. I don't know about you guys, but I've been like, okay, cool. Like, the entire year has been just straight line up, Fed's pumping. Is this something you guys are doing now differently in the last month or so?
Stressing about not having enough cash to buy, maybe. that would be about it. But
to add to kind of how bad the market kind of is at the moment, the 8% I don't think really does it justice, because the stocks that are kind of dragging that return down, which a lot of these mid-cap, large-cap tech names, not the FANG stocks. The FANG stocks have done okay. They've kind of held the market up until probably today. I think a few of them are down today, but overall, it's these tech names that were really high multiple stocks that are down 30 to 40%, which is why a lot of the growth guys and the overall market sentiment, I think, is a lot more fearful than probably we are. I don't know how your guys' portfolios have been affected, but I'm sure you're not down 40% like some of these growth guys might be on names like Peloton and Netflix, which I think Netflix is down 20% on an earnings report or something, maybe.
Yeah, something crazy, even though, like, I mean, it's not like the company filed for bankruptcy or something. It's just one day down 20%, crazy.
And for some of those names, it might be a bit of a healthy correction. Like, they were all in, maybe not Netflix specifically, but names like Peloton. There was a lot of bubblish tech names getting around that have probably been taken back to. They're probably still expensive, honestly, but they're getting more appropriately priced for the market.
Are any of you guys looking at specific stocks that are pulling back right now that maybe have been on your list for a while and starting to dust off that watch list now that some things might be coming down?
Well, I'm looking at Amazon now. I think it's the lowest Amazon has been in a year and a half. So that's kind of interesting. I was looking today also at Netflix and Salesforce. Those are getting smashed pretty good too. So could be an interesting buying opportunity for some of those. I'm not ready to get in with those guys, but I know there's a lot of people that I follow who are digging in at the moment.
Yeah, Amazon down 6% today and down 14.5% on the year already. So I didn't even realize Amazon was this affected.
I didn't realize either, actually. Could you pull up Netflix to see how far they're down? Because I keep seeing tweets about Netflix, but I didn't see how bad they've actually been impacted.
Down 22, almost 22% on the day.
That's insane. So
year to date, they're down 34%.
Wow.
You know, I mean,
wow,
they are
that's
going to
in
be
less than a
facing
month.
competition.
Say again,
It's
Karan?
all the competition they're facing, you know,
Yeah.
from companies like Discovery.
Because they have to burn a lot of cash to produce all the content they do, and it's not like some of that content might be kind of perpetual, but it's hard to predict that. So you just got to keep churning content, especially with all the competition, like you're saying, Karan, and it makes it very
Like
hard to have like
Discovery.
thick margins or anything. Yeah, Discovery being another one, Disney, all the new streaming services that have been growing like crazy, and Netflix has kept up their numbers, but it's very expensive to do that.
Another problem for Netflix is the kind of more general switch across, I guess, the US, but towards short form content, which is something that happened in China. So if that's any indication for a company like Netflix, that's really long form video. Things like TikTok, that's just one thing, but even YouTube and things like that that are becoming a lot more popular hurts a company like Netflix. Then you add in the competition from a Disney, I guess, Discovery and HBO and that with that merger. But yeah, it's either a great opportunity to buy Netflix or a downhill run for a long time for Netflix.
Yeah.
I'd be surprised if it's the end of anything, because I mean, but Squid Game like broke a bunch of records or whatever, and that was pretty recent, and that was like a full length show. So I don't know if short form is really what would affect Netflix as much. I think short form is probably a bigger threat to things like I mean, I guess YouTube's getting into short term, but it'd be more towards those like long form online video platforms. I don't think shows are going to be replaced by like pure cinematic shows by short form content, though. I guess time will tell.
I think more broadly, it's just what people are doing for screen time, and whether that's playing video games, short form content, or Netflix. Like it doesn't really matter as long as something's taking up people's time.
Or they're watching shows while also watching short form content on their phone or something like that. I'm sure that's fairly common, sadly.
I did see a thread. Someone was they were pitching, I think it was Sleepwell Capital, who has a Substack as well. He was pitching that Berkshire should be buying Netflix at these current prices, kind of as a solution to their cash pile. But it is one of the large companies that obviously they can only take sizable bets into huge companies over probably $100 billion in market cap. Netflix is one of those few that have been drawn down. And he made the case that Buffett understands Disney. He's bought that in the past. He was part of the Capital Cities and the ABC merger around that time. So he knows the media industry. Whether or not you want to call this a tech business or a media business is hard to kind of determine whether Buffett would be interested. But I don't know. It's a possibility.
Is this really a Buffett kind of company? Because I mean, we were just talking about like the capital expenditures required to keep up their content. It's not. I don't. I wouldn't call these cash flows that predictable, which is what I would think a Buffett type investment would call for, unless they'd see something that we don't, or they can somehow unlock some sort of value. But if they're trying to take more of a passive approach into it, I don't see the course changing that much anytime soon. If not, they need to ramp up spending to make content even better, or more content to try and keep up their current output. But I'd be pretty surprised, even if it dropped quite a bit from here.
Yeah, Netflix isn't a company I understand well enough to know whether he'd be interested. But I think part of the bull case from tweets and stuff I've seen here and there is that they're yet to really take advantage of advertising on Netflix. So there's a whole new source of revenue and predictable income that if they decide to take advantage of, they could.
They had a short feed.
They do have a short feed, I think.
No, wait, they have a Netflix Shorts? I
think
been,
if you go to
your in a while.
If you're on your mobile on Netflix, it has like a short clips from their Netflix videos. I only noticed it the other day actually and thought it was pretty weird.
Is it like trailers or like it's its own?
No, it's kind of like best scenes out of things, like funny clips from certain Netflix shows.
Interesting.
So I had the same thought that Sandeep had here. How many of you guys use Netflix regularly?
I'm probably a rare example that it's the only thing between YouTube and Netflix. It's the only thing I watch. I don't have any type of cable or any other TV platforms or anything. It's Netflix and YouTube, and that's it.
I've been like that for a while. I actually have kind of cut out Netflix because I spend almost all my time on stuff like YouTube. But that and maybe like Prime Video is if I ever want to like rent a specific movie, my wife and I will often do that. Otherwise, Netflix is kind of the default and has been for a while.
How about you,
I
Karan?
don't have a Netflix subscription. Never had one.
Wow.
Do you have any specific subscriptions or none?
No,
Yeah.
no, I don't watch TV as such. Pretty much just YouTube.
I borrow like the Duffley family account, so that's what we all kind of use it. So that's easy choice.
Gotcha. Yeah, I don't.
How about you, Brad?
I watch it once in a while, but you know, it's through my wife, and she doesn't even have a subscription. She I think it's from an ex-boyfriend or something.
That's right.
So
no one actually
Now we know
owns
why
it.
they're down
nobody
20%.
pays for Netflix.
No one
so,
paid. There's one
yeah.
person paying for all of the Netflix accounts in the entire world, and everyone else shares.
Yeah. So maybe if they fix that, they'll be better off.
Yeah. How much revenue could they unlock from from that? I really wonder. And how many people would they lose because of that? It'd be interesting.
Yeah.
I don't know. There's a trend of like people like sign up for Netflix, watch the show that they want to watch, and then just cancel it. I mean, that also happens. So I don't feel like the business is as sticky as some would say. But I don't know. That's one of the things that I think about when thinking about
I think
Netflix.
it's very show dependent. If there's like a great
Yeah.
show that everyone's talking about, then everyone floods to it. But what have you done for me lately? And then people leave. I think there are some cult classics that people really like to stick to. Like I remember when The Office was removed from Netflix at some point, a bunch of people left because of that. They were just binge watching the same show over and over and over. So there are some examples of that, but I kind of doubt that's the majority of users. It's probably a pretty focused segment.
Yeah. Also looking at the landscape, like I think the low cost producer aspect of it makes a big difference. And that's kind of where I see Discovery like having a pretty much of an edge compared to everyone else in terms of the legacy content they have, what they can produce, the cost of production. Yeah.
I don't know.
Not trying to
Disney?
pump this up.
I would kind of default to Disney on a lot of stuff.
Disney's,
They
yeah.
have a powerhouse of brands that no one can really touch, like, and that are very popular as well. So it's kind of weird. Intellectual property, like everyone has their own monopoly on whatever content it is, and then it's like, which monopoly would you prefer? and that's kind of how these businesses operate. It's a weird sort of thing. Because it's not like HBO could go make their own Star Wars. That's purely Disney's thing. Only Disney can make Star Wars content, or they can license it out or whatever. So it's interesting. I just saw this comment from ABD. Good that Tom's not here. I find his constant smirking annoying. Tom he's in the right place right now. He's probably out fishing right now. He doesn't care about this market crash. It reminds me of the Peter Lynch story. He's out golfing. He doesn't realize that the market is crashing. That sort of thing. That's Tom right now. He's blissfully ignorant of what's going on as he catches some large fish.
Yeah, I'm sure he's smirking away right now.
He's smirking.
I'm sitting with the CEOs of Thor Industries, and they're having a beer. That's it.
Speaking of relevant news, here's the opposite of a company decreasing. How about Activision? With that, that's a huge announcement. Microsoft.
Tom's in the comments.
Is he?
Yes, Tom.
There he is.
Well,
good to see you're alive and well, Tom.
We've had people pretending to be Tom in the comments before.
That is true. Maybe it's a fake Tom.
It could be a capital.
Wait, Tom wasn't asking about crypto? Wait, that wasn't Tom?
Yeah. Is that crypto, bro?
Oh, bro.
Anyways,
Bitcoin, bro.
Back to Bitcoin, bro. That's right. So this Activision announcement, though, a $68 million deal to acquire Activision. First off, that's a big number. Second off, it has a ripple effect if this deal were to go through, which nothing's a guarantee, as we all know. It could have a ripple effect on the video game space. I think Sony stock went down right after this was announced. They obviously have the PlayStation, which could affect that. Because Activision has a lot of big video game names, Call of Duty being one, and plenty of others. And What's your guys' thoughts on this move for Microsoft? Is this
first I want to say Microsoft is down too, but the whole market's down. So it's like, well, is that how do we parse those things apart?
Yeah.
You know what I mean?
But to Activision specifically, I think they jumped like 30% on the news, something like that, up to basically close to where the offer price is.
Yeah, there's still there's almost a nice little arbitrage situation there where they're trading about 14 to 15% below the offer price, but of course that's pending approval and assuming that's allowed to go ahead.
Yeah, that's what the discount's there for. It's antitrust concerns, due diligence concerns, plenty. Who knows? Maybe there's another gigantic fish out there that wants to buy Activision and bids it up. But there's definitely no people write it off like, oh, now Microsoft has a monopoly on whatever. But first off, this deal has to close, which is no guarantee. And I'll just say I wouldn't be surprised if it actually didn't go through when it's all said and done. I think it's set to close in like late 2023 or something like that is what they're targeting. But a lawsuit could push that a whole year. Who knows?
They're paying. The one thing that I kind of took away from it is assuming it goes ahead, or whether it does or not, they're willing to pay 7.6 times revenues is the multiple they're paying for it, which gives you an indication of what these other gaming companies could be valued at. So I kind of applied some of that to Tencent's gaming business that definitely, depending how you split the business apart, but very unlikely trades anywhere near that multiple when it's a higher quality gaming business than Activision Blizzard.
Would you but can't Microsoft, they have a little bit more room to pay a premium because they have their own platform with Xbox. They're probably it's probably a little defensive as well in if they're counting on consoles declining over the next, we'll call it 50 years as we move towards more like VR stuff, more PC stuff, whatever it is. Is that potentially a reason for them to pay up that might not be applied to other companies? I'm just trying to push back a little bit on the kind of relative valuation argument, Frank.
Yeah, I'm sure that's probably a reasonable justification of it. But there's obviously going to be a lot of synergies they have, even through the mobile business. That's the Blizzard part of the Activision. Sure. Is that right? They own, is it King Entertainment or something? I don't know.
Yeah, something like that.
Yeah, so there is different synergies they can take advantage of, and it's worth paying up slightly for. But yeah, I don't know. I think you can use it as a guide regardless whether they're paying up or not.
Yeah.
Frank, how's your Tencent write-up coming along? That's the next one, right, in Feb?
Yeah, that one will be out 1st of February. Yes. Pretty good. I'm about 4,000 words in. It's impossible to talk about everything, I've realized. I understand Jordan Nell, who I recorded a podcast with last week, he's got that right up. His is about 16 or 17,000 words, and it covers almost everything. But I quickly realized why his is so long, because every time I write about something else pops up. I'm like, oh, that deserves another 2 paragraphs, and you just can't get through it all. I originally wanted to talk about process and NASPers a lot, but I've decided I have to exclude that because the write-up's already getting too long. So it's a beast of a business.
I find it really interesting that processes also started raising debt. I mean, they've raised an additional like $5 billion in debt, and it really is a sign as to where they're thinking about capital allocation, how they're thinking about capital allocation. Quite optimistic about the prospects of process.
Can you tell us anything about the terms on that debt, Karan?
Yeah, sure. Send it on the group. But it's a total of around 5 billion that they've raised, and it's in different tranches of, I think, 3, 5, 10 years. 3.
Okay.
8 and 12 years, yeah.
I think it averaged out to be about 4%, I think, from memory.
Yeah,
I think
pulling it up right now.
Yeah, the ones due in 2023 are at like almost 1.9%.
Oh, so it's lower than I thought.
1.28%.
Oh, wait.
That's crazy.
Oh, wait. What's that, Karan?
No.
Or wait,
I'm
that's
just find the link. You guys, yeah, here 5, 10, and 30-year bonds is what they've issued.
Yeah, that one's a
That's
little
an
old.
yeah, because that's from
that's
July.
an old one. Yeah, this is the
That's
this is
still
a new
crazy that they even have that. All right, new tab.
Yeah, even that is low.
So yeah, total
Yeah,
of
so-
5.25 billion.
Yeah,
And they
averages
want
out
the GDP
around
equity for 2.7%. Yeah.
around 4% averaged out between a lot of them. Yeah, relatively cheap debt, and assuming they generate a much higher IRR on that debt than what they're paying. So
And this is just after completing like a $5 billion share buyback program that they had started a couple of months back. So, they seem quite set on returning money to shareholders, which is nice.
Charging it back up.
Yeah. I, in fact, added to my process holding by selling off a position. So, kind of concentrating the portfolio a little bit more.
Which one did you sell off again, Karan?
So, I sold some IWG. I sold out
Oh,
the entire
yeah.
position.
That's right.
And I've also sold a bit of Equity Commonwealth and added to Seritage.
Yeah,
So-
Seritage is down to $10. I was actually
It's back
surprised to
down to
see
my
that as
cost
well.
basis, yeah.
Yeah, it's back down to the good old days. And Mike was asking about that earlier. Has the story changed at all? Are we more nervous or less nervous than before about the debt? It sounds like you're not, Karan, if you're buying back in. Granted, the price will make things more attractive in any day. Why don't you tell us, Karan, why add to Seritage?
I feel like things are going in the right direction. My only concern that's there with Seritage is the fact that it could be taken private. That's the biggest concern.
Why
And
would
that
that
was
be-
also the concern when I was buying it earlier.
Why would that be a concern?
Because it wouldn't unlock the true value of the properties. I mean, eventually, the properties I think could be worth a lot more. And I don't mind if, over say like 3-5 years, it just becomes like a stable dividend paying stock. I'm perfectly
see.
fine with that.
You don't want to be forced to sell early if you can get an extra however many % on your return over however many years. Gotcha.
But yeah, I like what management's doing, and they're paying down debt. They're amending the terms of the debt. All good things. Yeah.
Yeah, they have made good steps. It's still a tall order, but it's getting shorter by the day in a good way. No longer such a tall order.
Are there super investors leaving other than PRABRA trimming his stake by like 27%? You guys aware about that?
Yeah,
I know Matt Peterson's buying. I mean, that's what he had mentioned on Tom's podcast.
So Rye's been doing his portfolio rotation, so it's kind of hard to pin that on him not liking it. It's more
Tax adjustments.
yeah, taxes moving into Prosus or Tencent.
Does anyone follow Manish Prabra's returns closely? Because it seems like he's probably had a bad few years.
Probably just anecdotally, like Alibaba obviously hurts. Seritage now hurts.
The currency in Turkey probably hurts.
Yeah, Racist would hurt depending on what he bought.
Micron's come back down. He did do well on that for a while, but it pulled back as well.
Micron, I don't think he's going to be selling for a long time. Doesn't seem like things are going to change there.
Yeah, I've had that same feeling that I don't think he's had a good year. I guess
Micron's
thinking-
getting started, I think. Yeah, it's still got a huge runway to go.
I know he's returned since starting the fund close to that 20% range, as far as I understand. But I would say his last 5 years have probably been below the market, but I'm not sure. That's speculation.
It also depends on his cash allocation.
Yeah.
Because that changes from time to time.
Someone said horse head holding hurts.
Yeah, there's lots of things that hurt. But he's got a few winners in there too, so it's not like it's all negative.
Yeah, of course.
Looking at our chat here, Has anyone been doing any buying this week? So, Karan, you mentioned Seritage, but that was more of a rotation, it sounds like. From
Strategy process, yeah.
Seritage process. Brad, Frank.
I bought into the new position not this week, the week before, I think it was.
Yeah. At NZM, right?
Yeah. But other than that, I'll want to increase to that position at some point, but I'm kind of waiting to see what happens with the Opis and Partners that holds 20% of the company, and he recently trimmed down to about 16%. So I'm waiting to see what he's doing before I make any more decisions on that. And there's also an earnings report coming out in February, which is either going to be a nice catalyst for the company, or he's selling for a reason, and it's that he knows that earnings report isn't going to be great. So we'll see how that plays out before I make a decision.
So right now, would you say you're at like a half position of what you might if the news was decent?
Yeah, that's one that I'd want to bet big on, just because I don't think there's much downside there. I don't think the multiple goes any lower than it is. I think they're going to keep producing free cash flow for at least a decade, even if the die newspaper business and everything. So you get paid back in dividends, so your downside's pretty protected. I would add more if I could see the upside is more locked in or more probable.
Sure. So then nothing besides that you've added to since last week.
No, I don't think I'll be adding anything else.
Got to replenish some cash first.
I do have a lot of cash there, so I want to do something. I just don't have anything great to do.
What's your cash allocation right now?
It's about 10%, and I don't like to have cash built up.
I thought the NZM move would put you closer to 0%.
No, because I sold Twitter and
that's right.
Something.
Not Redbubble. That was a while back, right? Twitter and what was the other thing you sold? You don't even remember. You don't care.
I don't even remember. I'm gonna look at my portfolio.
You could tell it wasn't
over
a
the wire
holding.
Was it?
What was that?
You're still holding over the? Was it on the wire?
Over the wire. Yeah, that's what it was. They're being acquired, so the returns have kind of stopping where it is.
Pause button.
It's just kind of that's just been trading flat for a while. It's like 4 or 5% below the price they're being acquired for, but I'm just kind of assuming that's a bit of an opportunity cost, and I'd rather that somewhere else. Although it ended up in cash, so we'll see.
You got some pushback from Mike here. He couldn't get there. He's not convinced the online subscription rotation is going to work enough to make it worth the opportunity cost. Is that really all? It sounds like that's what it really hinges on. If that needs to go decently well,
that's all that matters. Yeah. It's going to go okay. It's whether or not it does well. Sure. The upside comes for if it does well. Otherwise, it goes kind of like most others have kind of gone. And you just get a very average return. The multiple probably doesn't expand, and you get a dividend.
I'm not going to show the punch card portfolio.
Yeah, I'm holding it up right now.
Don't you dare.
Sorry to change topics, Frank.
We don't talk about the punch card portfolio.
I just noticed Etsy. Eric mentioned Etsy. It's down 50% in the last 2 or 3 months. So
wow. It ran up real high though.
Oh yeah, it was hot.
It was kind of in that Peloton bunch of massive PE expansion without the earnings.
Yeah, I don't know what the multiple got up to, but it's taken a beating recently.
So since you brought up the punch card portfolio, it's we're rapidly losing assets under management. So it's we're down to 850,000. We started with $1 million.
Well, that's good. Now size isn't going to be an inhibitor for us.
Yeah, so we're compressing our universe of opportunity, or we're expanding our universe of opportunities because smaller things will now move the needle more. But yeah, we're deep red. This is on Sharesight, by the way, which we always include a link to in the description below. If you open up an account using our link, you get a few months free when you sign up for an annual subscription. So go ahead and check that out. You can also open up a free account as well for some of the more basic features. It's like a nice portfolio tracker. And we have our holdings here completely being held up Frank has attempted to put KPG. Frank and KPG have attempted to put the portfolio on their backs, as that is the only positive holding by a long shot. Process has been flat. Otherwise, everyone's down. I just took the lead today for biggest loser because Turtle Beach dropped like 6.5% or something like that. But
you've been buying Turtle Beach.
Huh?
You've been buying Turtle Beach, haven't you?
I have. I put some cash in today, whatever I had left. Gotta wait till next payday, because I'm not gonna take out debt for stocks, not unless it gets crazy. So,
could you click on the monetary gains just to see the percentages on that? There's a little tab to click up the top of the screen.
Oh, right.
Yeah, so it shows percentage instead.
Yes, and even with the currency drag,
So we have 3 stocks down over 25%. That's pretty crazy.
In just a few months. So, good timing.
My correction, yeah.
Yeah, the problem is we all had to pick a stock at gunpoint, so it was like didn't matter what the price was, so we just had to buy it indiscriminately. And
guys, is it time to sell some KBG so we can get in lower?
Yeah, we need some help.
Don't touch it.
Cut the flowers.
Don't touch it.
But trimming the flowers and like washing the weeds.
So that is the punch card portfolio. Sharesight.com /punch card investing if you guys want to check out Sharesight.
Yes, we had a question about kicking out some stocks and adding new ones. So, Jack, can you refresh us on the protocol there?
Yeah, so the rules would be we all have to agree, or the majority of us, so 3 out of 5, have to vote yes to add a particular stock. And when that happens, that triggers a survivor vote where we kick it out to all of you beautiful viewers, and we'll put it on our community tab where you can vote for which stock gets removed. So we don't pick what gets removed; we pick what's added, and you guys help us pick what's removed. So
is there a way to get immunity from being removed or no?
No.
Okay.
There's no veto powers, yeah.
Yeah, that eliminates the fun.
Kelly Partners needs immunity at this point, I think.
You gotta plead the case. So I don't know. We had a vote a while back for Facebook. How's Facebook doing? Or Meta, excuse me.
Probably getting slaughtered.
It was going okay until the last couple of days. The FANG stocks were kind of floating along.
Down 10% to start the year.
It's not bad.
Pedestrian. And down 4% today. I mean, it's not nice, but for current shareholders, but
unless they're buying, then it's great.
Yeah, right. They're still up 13% year over year. So if you thought it was expensive then, probably argue it's still expensive. But we had a vote on Facebook a while back, and we decided not to. And I think we had one on ASOS as well, and we voted no there. Those are the only two we looked closely at. Are we thinking about any others right now?
We could add New Zealand Media and Entertainment if anyone's interested.
We could vote on it.
Discovery.
Yeah, or Discovery or NZM. Brad?
What else we have in the comments here?
More process is always a good thing. Yeah.
More process.
Yeah, double down on process. It's like the
Tom's
whole
in there.
Like what Jason mentioned last time, it's still like running around in my head.
Oh, we got a hot take from Tom. He wants Thor.
Is Thor getting pounded right now?
Thor, okay.
Thor Industries, let's see it.
Thor's probably doing okay. It's one of those value stocks that's buying back shares. They're probably trending along nicely.
No.
It's
It's not great for Thor recently.
Oh, really?
When they're at a 1 year, 52-week low.
Starting off the year in down 16%.
Yeah, right.
And that's compared to a year ago. Yeah, down 20% from a year ago. And they still have their huge backlog of orders. So I don't know. That actually sounds kind of interesting. We should have a deep dive on Thor one of these episodes.
Have you looked much into it, Frank?
Only I talked about it with Tom on the podcast. I recorded with him. That's the furthest I've ever went into it. So I looked at I looked into it a little bit prior to that conversation, but beyond that, not really.
Well, if you're still on, Tom, next episode we're gonna prod you for some info about Thor.
Yeah, I think that'll be a good conversation. Especially now that prices dropped quite a bit.
There's 2 companies in the portfolio I would vote Thor over. So if you want my vote now, I'm Thor in.
Well, let's
What
wait
are the
for
2
Tom.
companies?
Tom needs to make the pitch for it.
I got your back, Tom.
Okay, he's still with us. Good. Okay, what
So,
else
yeah,
we want to
Brad,
hit
do you
on?
have any companies you'd want to
No,
include?
I haven't added anything recently. I'm trying to channel Guy Spear a little
Detox?
bit more. Yeah, just
Stock detox.
do a little meditation. Get
Send
some-
good feelings towards the stocks.
That's it. Just don't look. It's
Don't
funny.
insult them when they're ugly.
People keep messaging me on Twitter asking about Seritage, and I'm like, I don't really want to look. Stop bugging me about it. I just want to.
I'll check back in 5 years.
Yeah, that's it.
Yeah.
So that's where I'm at.
Manu compliments you on your shorts, Brad.
Appreciate that,
The
Manu.
shorts you've been putting on. You've been shelling out the investor wisdom.
And a lot of shorts.
How have those been doing from a YouTuber perspective?
Lee Lu gets pretty good traction.
There's not a lot of Lilu content. That's probably why.
Right. That could be part of it. The supply demand curve is off.
Yeah, right. Demand's nice, no supply.
Yeah, it's been all right. Just kind of experimenting.
Brad, I got an email about something upcoming of yours. I don't know if you've announced it or not, though.
You got an email?
I got an email. I think if you register your Twitter with such website I won't name, people get notifications for it.
Gotcha. Okay. Well, that explains it. I wasn't quite ready to announce it, but people are signing up already. So I guess that's a good problem to have.
Nice.
All right, we'll move on from that because you
Okay.
don't want to announce it.
Well, that was awkward. Oh, Jack, an impression.
What?
There's a request for an impression.
What is that? I don't even know what that is from
At the
Tom
bottom.
in the
I don't
chat.
know what it is either.
Is that like a down under thing, or am I just like out of touch?
Frank, you get it, right?
It's a cricket thing.
Oh, okay. I had a feeling.
Yeah.
No, I got nothing.
Okay. Well.
Jack does a great Trump impression. It's
I do an
fantastic.
okay. I do an okay one. It's tremendous.
It's good to lower the expectations, I guess, right? Next giveaway. Have we done giveaways? Is that a thing we do, or are we being?
We did it. Yeah, we did. We
2000.
did. Remember we did our joke one. we needed the best investing joke in the comment when we hit. I think it was when we hit 1,000
That's right.
subscribers.
That's right.
2000.
And maybe we'll do one at 3,000. So that'll be encouragement. If you guys want to get another giveaway contest or something going, let's get to 3,000. And
That's right. Tell all your friends.
we will promise that we'll do something for 3,000 subscribers, and that should be pretty fun. Oh, Brad, you're starting a SPAC, right? Is that the announcement?
Yeah,
That's the announcement. Yeah.
Yep, I'm starting a
got
SPAC.
Shamat's
Sign up for
attention.
my sign up with your email for my SPAC.
No. If it was Chamath, that would be below my line. That SPAC would be below my line. If
Is
it was
Chamath on your blacklist?
that is below
Jack?
my line, Brad. What an unbelievable clip.
Chamath has gotten a lot of flack recently. Whew, man, people love to hate on Chamath.
It's because the returns aren't good. He was all world when the returns were great. Now everyone's mad at him, so they'll go after anything.
Yep. Right.
We're going back in the chat here. See what we got going. I'm sure we skipped over a handful of questions for sure.
There was a question earlier on about most interesting stocks with the pullback. I guess we kind of touched on it, but is there anything standing out?
Big standouts that aren't already in the portfolio. I don't know.
Brad, are
I'm
you
more.
looking at Coinbase? And I know you're interested in the whole crypto space. So
Yeah, I nibbled on Coinbase, so I have a little skin in the game, but I'm at the start of my learning there. And I haven't looked at it recently, so stop telling me it's dropping like a stone.
Yeah, it's oh my goodness, it's down 13.5% on the day. But I mean, the whole crypto market is tanking,
Yeah.
as it does.
yeah, I just saw that the president of El Salvador,
Salvador.
is that, yeah, he's like, yeah, I bought more Bitcoin. I'm like, wow.
That guy leads a country.
Yeah, with his
he
cap
acts like he runs
backwards,
a
he's
hedge
leading the
fund because
country.
that's basically what he does. It's crazy. Like, dude, your country's not an ETF. Like, relax. Any others? So Coinbase. I want to look at Amazon again now that it's. I hadn't realized it had come down like that, Brad, until you had said earlier.
There you go. I threw you a bone with here, and now I'm getting you with coin, I guess.
Not necessarily.
Or
Amazon's
Amazon.
Amazon's coming from a pretty expensive place, so I don't know.
Yeah.
It's also huge.
Could have a long way to go, but
Yeah.
I mean, it's incredible. Obviously, an incredible company as well.
Yeah. Right.
So.
I haven't looked at what Spotify's been doing, but that's one that I've always liked as a high quality company that's always just been too expensive, so I don't look at it.
Yeah.
But if that's getting cheap, that's probably something that's worth looking into.
We could always flee to Berkshire. It's basically a fortress that isn't moving, so they're going to keep buying their own stock.
Berkshire's down at all. Like maybe down like 2-3%.
I don't think it's down at all. That's what I'm saying. It's like a safe haven.
It's gone crazy. Like in the past month, I'm like, what's happening? Is this a SPAC or
they're
like is
vacuuming their own
happening?
shares? They're just like trying to take them all out of circulation.
I find it a little bit strange that Berkshire hasn't been hit with inflation concerns, just with a huge pile of cash. I feel like that should discount the stock at least a little bit, but it hasn't seemed to at all.
I've thought of that as well. And even within all the companies in the portfolio, like Apple has a ton of cash within it too. It throws off tons of cash flow as well. So it's not at the same level as the Berkshire cash pile. But I mean, they took out like the 0% Japanese debt.
Yeah.
So they have plenty of inflation hedges built in. It's kind of like a Swiss Army knife portfolio. Maybe you got the cash allocation, you got some debt, some cheap debt that is. You got tons of great companies. You have some smaller ones mixed in as well, but mostly large, giant,
ridiculous dividends.
Yeah, lots of cash flow from the investments. In a decent insurance business. So
I don't think they're buying back stock at these levels. I mean,
no, it's not. It's not all of it. No. What did they do last quarter with buybacks? It was pretty significant, wasn't it?
Not sure, but I think a quarter back it was like 15 billion or something.
Yeah, it was a lot.
Yeah, there was a significant amount at some point through 2021, but I don't know exactly what quarter it was.
I think around 250, 240 is when they were really buying aggressively. Around the time Lee Lu was buying Berkshire.
Tom says he suspects it's a little expensive, which I think is definitely fair. They're up over what are we at market cap wise?
Tom also said he's interested in Spotify as well, so maybe that's something we need to vote on in the future.
Spotify.
Spotify is a company that I really, really like, but yeah, I really just set it there in the high quality, too expensive pile. So if that keeps coming down,
I
would start to deep dive into that.
Looking at the music space, like wouldn't UMG be more interesting as opposed to Spotify?
I don't know Spotify well enough to really argue against that, but I think it's the higher quality business, and just with the podcasting and additional sources of the optionality and stuff they have as well. But I don't know the business well enough.
One thing I will say about UMG as for quality and potential avenues for growth that they've really started to tap into over the last couple of years is they have deals with platforms like TikTok, YouTube, where rather than shutting down content that uses their music, they just basically take the revenue so that the music can still get played everywhere and they can still take revenue from it. I think that's been a huge source of growth. And when Karan and I were obviously interested, given our Pershing Square allocations, and they had the big deal with UMG that they stole from Tontine Holding shareholders, and that was a big point for like an avenue for growth. Was they're actually embracing the sort of not streaming space, but individual creator content using their music and still finding a way to tap into that revenue, which I think is huge and is very different than what was happening, like say 10 years ago, where if you use the music, it just gets shut down, copyright strike, whatever it is. Now they're actually embracing it in a good way. And I assume that will only get bigger as time goes on.
Yeah, I think no matter what happens, UMG will tend to do well, irrespective of
it's not going anywhere.
Apple Music, Spotify, whoever.
Right.
So
Spotify are down a bit over 40% from their all-time high. That's pretty insane.
What's UMG doing? They're down 10% to start the year.
Tom just said Jeremy Deal got him interested in Spotify. Podcasting is a big pushback on UMG. That podcast that Tom did with Jeremy is really good too. That is him and Sleepwell Capital are two guys that got me interested in it. And there's a lot of guys on Twitter that love Spotify as their kind of growthier type investment, high quality business.
Yeah, they're both good. It's kind of like one is the music itself, another is like the platform that everyone uses. So it's sort of like chicken or the egg, whichever one you want to do.
Yeah, they're not competition.
If that's the right, yeah, they're totally symbiotic. Like they rely on each other. Like people listen to music on Spotify, and Spotify gets the music from UMG. So, and others, of course.
And then if you're interested in Spotify, if you want to go really cheap, there's Tencent Music in China, which is the same business, but a lot cheaper. Probably not as high quality though.
But still price cures everything. Like if it's cheap enough,
right?
It's a good investment.
It doesn't need to be the best business in the world as long as you get a decent price. And
on the flip side, if it's high enough quality, price doesn't matter as much. So it goes both ways, I guess.
Yeah, it does. The spectrum. It's a spectrum.
Any other questions in there we can jump on?
I'm browsing.
Yeah, Abhishek's question about Sharesight. I have no idea. That's a huge risk. Like,
it's also just a
question, just so you could say that.
It's just the opportunity cost risk, though. There's no real downside to it.
There's no way it'll go private at like $8 per share or something. Like, I think at least $17 to $20 per share.
Yeah, it would be above
minimum
for sure.
Yeah. So there's no way. I think you could probably justify a price for Sharesight below 25
to buy the whole thing. Yeah, I got nothing to add there. That sounds reasonable.
There's a question there about ESG. If you want to,
do you consider ESG like? What does that stand for again? It's like environmental sustainability,
environmental, social, and governance.
Social and governance. Thank you, Brad.
Mm-hmm.
Do you have some thoughts on ESG? Is it part of your investment criteria? I know you've touched on it before, sort of.
The market definitely, like there's hedge funds that only invest in ESG companies. So it's definitely a considerable part of some people's investment criteria. I think it could offer additional upside. Like there's one example, I'm looking at this kind of special situation called Have Group in Norway, which kind of, they're like shipbuilding type company. You can pull them up if you want. It's a SPAC that's kind of it's been spun off from another company. It's like the Good Business HAV, probably. Have Group. And it's been spun off from another company called Havyard. And the management kind of all went and bought shares in this new spin-off. And it looks like they spun off the good part of the business and got rid of the rest.
This one,
but it's also, yeah, that's the one. The financials will kind of just complicate it, but yeah, that gives you an idea of what they do. The holding company for them trades. Okay, so I'll try and word this right. The holding company holds 66% of this company, and they trade at a 23% discount or something to this company's market cap. But the thesis here is that this is a higher quality company. They've just taken the bad business, left it behind, spun it off into this. And it is kind of ESG focused, which is kind of what reminded me of it. They're kind of, their approach to what they're doing now is a lot more ESG focused, which could justify a higher multiple in the future. But it is speculative when you start to put ESG into an investment case. If it's a really low multiple company transitioning towards an ESG business, it might start to get some institutional managed money in the future, which leads to a higher multiple. But I wouldn't put it as a big part of a thesis, just maybe a little bit of additional upside possibility.
With ESG in general, it seems almost in some cases it's clearly important for a certain company, but oftentimes it just feels kind of like almost like a participation trophy that's just kind of handed out.
Yeah.
And it's kind of meaningless. And the more that happens, the less meaningful like an ESG certification, if you will, would be. And that's my big problem with it right now, at least as it is. It's kind of like because they do like one sort of sustainable activity, you can ignore like the other 90% of the company that isn't, is how it kind of feels to me in some cases. I'm trying to think of some off the top of my head, but whenever I see ESG funds, I'm always surprised to see like what companies are in there. It's like, hold on a second, that they're now a sustainable company, or they have like great governance. Like, what's that about? So it just seems kind of arbitrary in a lot of cases. I don't know if you guys have other thoughts on that.
Yeah, I agree. Usually it doesn't mean anything to me, but it does matter in the sense of where money moves in the current market environment. Yeah. Tom kind of made the point there that it also creates opportunities in the flip side, the non-ESG companies or dirty industries, which is true as well. It's the reason oil has been so cheap for a while. And if you understand oil well, you'll probably be having some great returns over the past 12 months. Mm-hmm. And your portfolio would look opposite to what the S&P does at the moment.
Yeah, people need energy, whether it's dirty or clean. And when there's not enough of it to go around. Brad, I got to get your thoughts on ESG.
Yeah, ESG. You know, so much of the ESG rhetoric is around funds creating products for people because they want to generate fees, right? There's not a lot of thought that goes into, all right, how do we design these methodologies to really capture, is there a superior environmental aspect for this company, or social or governance? And Aswath Damadran put out a video about this not that long ago, I think maybe within the last couple of months, about how most of it is just greenwashing. So it's definitely something I consider, primarily the environmental piece. That's kind of what I'm about to launch, funny enough. But
in your SPAC?
Yeah, in my SPAC. But there's a lot to be desired with most of what goes on in the ESG space. So I'm hoping to, get to the bottom of some of that.
Ethically, I like the idea of ESG, but economically, I think I'm not going to decide where my money goes because of that, because I know that's how the world kind of works. But theoretically, it's pushing towards a better future. But
yeah, it's the tragedy of the commons that it's allegedly trying to push back on. But unless everyone agrees, the tragedy of the commons is always a thing, as long as there's like one person who can pollute, everyone will pollute, or whatever the vice is that's been allowed to this point.
I feel like Mr. Beast does more for ESG as opposed to like so many huge companies out there.
Yeah, how do I invest in Mr. Beast? That's what I'm looking for.
Watch his ads.
Watch his ads.
Mr. Beast needs to go public. Yeah. That's what needs to happen.
Yeah. I wouldn't be surprised if he does.
Honestly,
Could you like wake up and be like, yeah, we're gonna clean every beach on the planet?
I'm sure he has like. Does he have like
He's done that.
Does he have like a specific nonprofit company? Like you could, like that's all he really wants. He just wants a place to field donations, which is sort of like investing in it, right? Unless he's trying to turn beach cleaning into a for-profit thing, which that would be kind of weird, but he could, I suppose.
No, I don't think his focus is profit. Like he just wants to do huge.
He reinvests every
project.
single thing back into his business, runs a very low margin Costco type thing.
Costco, he's the
same
Costco
thought I
of
had.
YouTube.
Exactly the same thought.
you come for a deal, get these wacky videos that can crank your
and just like Warren, he lives in his childhood home still, right?
Yeah.
And that's a frugal
Mr.
lifestyle.
Beast is Warren Buffett, the Warren Buffett of YouTube. That's it.
This is getting weird.
What a tangent. Let's get some final thoughts here. Any other specific stocks that might come to mind that you're looking at now, especially with prices being as volatile as they are?
The only real main thing that's changing for me and this is not just from the past few weeks, it's kind of inflation and everything else, the overall market environment.
Sentiment.
It's made me want to shift more towards a special situation type approach to investing and getting back into some very cheap stuff rather than these long-term compounders that I think, and I don't want to base my investment strategy off a macro call, but I've always kind of wanted to be 60-40 in my portfolio, 60% being these high-quality compounders, never touch them, leave them alone, and 40% in these deep value, 50-cent dollars turnaround plays. But over the past 2 years, I've been 100% in long-term compounders. I've just recently entered that position in New Zealand media, which is more of a 50-cent dollar. And I would be leaning towards making more of those type of bets while the market looks the way it does. But I probably want to do that anyway and shouldn't let the market decide that. But that's kind of my thoughts at the moment.
So a shift towards shorter term, kind of medium term special situation stocks. That's your bigger focus right now.
Yeah, and I think I've always wanted that to be the case. I just haven't dedicated my time towards that. And the opportunities I'm coming across more recently have been a lot more appealing in those types of investments, whether that's by coincidence or not, I'm not sure.
But why make that focus? If a good opportunity is a good opportunity, so why does it matter if it's a special situation versus a long-term compounder type thing? Is that, you mentioned kind of interest rates being a potential concern? Is it that kind of fear aspect, or what is it?
No, I should be very clear. I'm not going to turn down a long-term compounder. If I come across a great business that's cheap and I can hold it forever, I'll still buy that. It's just my strategy that I've kind of had in my head for the past few years was to do this kind of split between the two, and I haven't done that. And the opportunities that seem to be popping up for me right now just tend to be those type of companies. And I don't know if that's because of what the market's doing, that these opportunities seem to be appearing to me, or whether I'm seeking that more or not. Definitely, I should suggest the market shouldn't be the indicator of why you do that. But I do think the probability of that outperforming, or just more generically value outperforming growth moving forward, is pretty high in the current market situation, I guess.
Fair enough.
Well, we'll see in a few days, huh?
Yeah, we'll retest that.
This is kind of an interesting question from, where did I see it, Matt? What would be the highest PE you'd hold your favorite stock? I kind of like that question.
This is like a total it depends question, because
who looks at PEs? I mean,
well, so the essence of the question,
it's just like if it gets expensive.
How expensive does something need to get, from a quantitative perspective, for you to say, okay, I need to sell this thing?
It totally depends on the thesis to start. Is this like a liquidation sort of thing? Is this a huge growth company where it's worth paying like a super high multiple? Maybe not 150, but who knows? I think it totally depends on the company itself, and it's like a total individual valuation move. It would be like a day of analysis to figure out whether it's really worth selling. Plus, you got like taxes and other considerations to throw in there. Opportunity costs, like what are you going to move the money towards? All these things factor into the sell decision. Because
For me, I know something's gotten expensive when Kathy starts buying.
That's your
like
signal.
a huge indicator.
Yes.
Just sell, maybe consider. I know Frank and I got out of Twitter at like the right time because of Kathy.
Tom got you here for the short interest companies.
I like it
Not
cheap,
PE.
of course.
Who cares about earnings when you got short interest?
If it's cheap enough, it works.
If the growth is high enough and the quality is high enough, the PE doesn't really matter.
Oh,
Something theoretically, something at 100 times earnings could be cheap.
right.
Theoretically, very rarely is that the case, and I guess it comes with more uncertainty. Like I'm less willing to accept something's growing at 100% for the next year than I am to accept something's going to grow at 20% for the next year. So I would be, I would hold companies pretty high in PE ratio, but it just, it's very, like Jack said, it's very depends on the situation, the type of company, the type of investment, the growth that's attached to that.
And the most interesting investment in my portfolio process, PE is not even a consideration. I mean, that's kind of, at least the situations we look for, at least that's how I think. I'm like, PE is not really a factor that I think drives any of our investment decisions.
Well,
Is it?
sure it is. Like you're looking at least the way I always look at investments, present value, future cash flows, and cash flow I kind of equate to earnings. They're calculated differently for a lot of companies, but like isn't the profit of the business really what you're counting on at some point in most cases?
No, but specifically PE as a metric. Like, I mean, would you filter and look for?
Sure, yeah. You're not hyper focusing on like really any one metric, whether it be PE or something else. But just earnings in general. Replace PE with earnings or cash flow or profit, whatever business goodies that you prefer.
Owner earnings, yeah.
Yeah.
Tom makes a good point about normalizing earnings, which is, a PE can be very misleading one way or the other, whether it's too high or too low, depending on some adjustments that could be made to normalize some of these non-GAAP cash type expenses that could really change a PE ratio one way or another. You have to normalize things. There's a range of reasons why a PE could be inflated.
Yeah, Eric makes a point. Most good companies will look expensive at some point, even within a year. It's like whatever the average delta between a company's 52-week high and 52-week low is like 50%, and that's like for pretty much any company. You can kind of anecdotally, you can just kind of point it out, be like, hey, the high and low of the stock are about 50% apart, and that's like for good companies, poor companies, whether they're down or up. There always seems to be a pretty big spread on individual holdings. Obviously, there are plenty of exceptions, but it's pretty common that there's a pretty big spread. So it makes sense that pretty much any company will eventually look expensive. And theoretically, that also means that a company will look cheap at some point too.
PE ratio, or I guess whatever multiple applies best to a given company, I think it's more important for that to be low on the buy decision rather than in your sell decision. So I'm more inclined to buy a low PE or whatever other multiple stock to kind of get some type of re-rate on that multiple as the business improves and grows. But I'm less likely to sell because of a high PE, because theoretically I've bought into that company because it's a high quality business. Yeah. Unless it's a turnaround type situation where maybe then you do follow a multiple more closely, buy at 4 times earnings, sell at 10 times earnings. But usually it's more important for the buy decision rather than the sell, I think.
There's also Tom's preferred ratio of price over what Warren paid. Like not a bad starting point.
Yeah.
I think that's a good spot to
what Charlie paid in terms of Baba.
Yeah, no. Maybe his new cost basis.
Guys, do you think he's doubling down again?
Would that be an 8 times his initial investment?
He's compounding the investment, just by himself.
The cash invested is what's compounding, not the actual holding. He's doing
Does
it
anyone
wrong.
know? Is he leveraging to buy this? Where are they pulling that cash from to buy more Baba? Does anyone know? I've never looked into it.
Yeah,
I know they have
telling
levered-
Daily
their
Journal
holders-
has some weird like debt structure where they have debt, but they never have to pay it back. There's something that's different with Daily Journal. Are any of you familiar with it?
Not sure.
No.
I know they have a weird leveraging structure that they've used for positions in the past, but I don't know if that's how he's doubled down twice, because that's a lot of additional cash that I don't know if they had a huge cash pile sitting there or not, or if it came from their debt. I don't know. I don't know what's happened there, but
Daily Journal is a little obscure for my liking. You'd like to see more, see things a little more clearly.
There was a new letter by Charlie that Monish had like tweeted out. I don't know if
yeah,
you guys saw that.
he said barely anything. It's like a 1-page letter. It's got about 300
Like
words on it.
opaque.
Yeah.
He's like, yeah, we're planning the money into journal technologies. Like, sure, yeah.
Thanks.
Baba,
Whatever that
Baba
means.
is journal technology, sure.
Right. I think that's a good spot to wrap up in this. We'll see where the market is in the next week, because we might be heading into rocky territory. It might be a roller coaster for a while. I mean, it's been a roller coaster up the last couple of years, really the last decade, besides a blip in March of 2020.
So we can use the same clickbait title next week, that means?
Yeah, right. Yeah, right. The stock market is down. Why we've sold everything. Stuff like that every week. Stock market is down. Just sold my kid. Selling everything. So, anyways, if you guys like this video, appreciate if you gently tapped the like button to turn it blue. That would help us out a ton. And if you haven't subscribed already, we'd appreciate that as well, so you don't miss next week's. Maybe it's clickbait, maybe it's not. Maybe we'll talk about Thor Industries. That'll come up at some point, because, hey, maybe that'll be the next addition to our very weighed down punch card portfolio that we're trying to nurse that back up to health over the next few years. So with that said, guys, till next time, see ya.